Hi guys, this is Manny Chopra here and welcome to another episode of Back to Brick. And here with me is none other than Saif Derzi, and I'm really privileged and lucky to have him with me here today. Hi Saif.
Hi Manny, thanks for having me today.
Thank you so much. So, guys, just a very quick introduction into the Back to Big podcast. It's a fairly new podcast. My aim for this podcast is to help beginners and experienced property investors identify current market trends and opportunities in the market, but also obviously highlight the risks and how they can overcome some of the challenges from learnings, insights, and journeys from our esteemed guests. Do check out my websites. Not only am I award-winning property developer, I'm also a host of the Team Titans events. I also have written a book, Cash Rich, Time Rich. Do look it up on Amazon. My focus right now in commercial to residential deals, primarily in the Southeast. Our websites to check out and connect with me are teamtitans.co.uk, chopperpropertygroup.com for our projects, and do connect with me on Instagram, LinkedIn, and all the social media via my Manny Chopra hashtag name. So guys, today, as I mentioned, I'm here with none other than Saif, and I'll just do a quick brief introduction about Saif before we delve into Saif's journey and story and how it all began. So Saif is an award-winning property trader and investor. He has been in property for over 7 years, and since he bought his first property in 2015, fast forward to today, he has brought and sold over 160 properties for his investment and trading company SDGB Properties. He's managed over 400 properties for landlords and investors through his property portfolio building company Letco, and owns and runs a cash buying company called Property Buyers Today. Saif has built his business based on delivering what he says he will do, and this has allowed him to win over repeat business from the likes of larger cash buying companies, as well as gaining the trust and from agents and auction houses for them to dispose of their assets via Saif's company, which has helped him build traction and scale. He also won the Property Trader of the Year award recently in 2022 and continues to use this strategy moving fast forward as it provides certainty and speed. So, Saif, in a very, very short space of time, you've achieved a tremendous lot of stuff. So, if I may take you back to sort of 2014, 2015, when you were sort of thinking about coming into property, how did it all start, if I may ask you, and sort of, how did it all begin? The seed of, property in your mind and all that. We'd love to hear your story.
Yeah, sure. Thanks for that intro, Manny, as well. Really, really appreciate it. So, I mean, from my perspective, I take myself back to 2015 as well. Funny enough, and a lot of people tell me, they always ask me the question, how do you see the market? How do you see the market? This has been going on for years. And I say to them, back in 2015, when I bought my first property, everyone was talking about recession. Back in 2015, and it's been 8 years since then, and what 8 years we've had. So, generally speaking, that's kind of my introduction to people saying don't always time the market. But if I take you back to 2015, when I started off, I had built up a business at the time, so it was a healthcare business. I set it up from scratch. It wasn't anything that was sort of how can I say this, too complex. It was just a really simple. It was a simple business, and almost you can look at it as more of a self-employed type of business, really, where I was helping healthcare companies export their products abroad and opening up multiple sales channels for them. And in return, for every order I was getting a commission, essentially. But that you can look at like any kind of trading business, right? You put your time in it, you get your money back. Once I had built up a bit of a pot of cash, I then decided, well, what am I going to do with that cash? So traditionally, being younger, usually people go out and spend it and buy all sorts of materialistic stuff. I had thought, well, let me invest it. And to me, I'd come from a household where my dad was always a property investor. Now, my dad, yes, although he was a real good property investor back in the day in the 70s and 80s in London, he went through basically a recession, and that recession wiped him out completely. This was back in the 80s. But I was at home, he would always tell me the reasons why the recession hit him hard, what he did wrong. He took his eye off the ball, he didn't really manage his assets very, very well. He was travelling quite a bit and basically just got the managing agents to sort it when he wasn't really keeping on top of them. So all these things I took away and I thought, I think I can do this, and almost there was something for me to prove to him. So in 2015 I did something really simple. I looked at a specific area where there was loads of new builds going in, loads of infrastructure, loads of capital investment, and I went to the already built second, basically this kind of second house,
second homes, yeah.
It was already available, And I just bought that. That's all I did, really. And I used an estate agent. I always say to people, I didn't go and buy an off-market deal that was B&V and all the rest of it. I just went and I cut my teeth into property. That's all I did. That was 2015. Didn't do anything until 2017. 17 was when I bought sort of another 3 properties where I'd saved up a bit from my job at the time and the business, and then did it. But I thought this is going to take me quite a long time. I could buy one a year, 2 a year, etc. But it's going to take me quite a long time to get to where I want to get to. So I then sort of stripped the model back and thought, how can I scale? What is the real opportunity in property scale? And the opportunity was what people now know as buy, refurbish, refinance. There was no title to it at the time when I did it. I just kind of thought, I've got to buy something that's lower than its value, add value to it, refinance it, and then kind of move on. And that's what we did. And fast forward today, that's how we've scaled up a large amount of our portfolio.
And in that model, then that basic model, as you said, do you do like just a mortgage?
Yeah, so what we were doing was we were using a bridging finance on the front end. So we were buying a property with bridging finance. Now, vendors don't realise that we're using bridging finance because it's that quick that they look at it as if it's cash, right? So, we can complete a bridging finance application within 4 weeks on most of our stuff, so it's as good as cash. So we were going in saying to vendors, look, I appreciate you might have had a chain break or divorce or whatever it is that you need to sell the property quickly. You want the speed and you want the certainty. And the one way we've always built our reputation in the market, and one thing someone will always tell you about us, is they will always complete. If they tell you they're buying something at this price, no matter if coronavirus happened, which it did, and we still completed on every single deal at the price that we've agreed it at. So that's how we built our reputation up in the market. That was the USP that we were giving to people. In return, what people were giving to us was equity. So, okay, my house is worth 100. I'm happy to take 85 because I need it gone, basically. I just need it sold.
So this model that you're talking about, is this the same model as your cash buying company?
Correct. That's what then evolved into the cash buying company.
So initially it was buy-to-lets, mortgages, and then it evolved into bridging, doing what you're saying you're doing. And were you finding these deals on the open markets with like a raft of agents, or a bit of both, or direct to vendor? How were you?
So initially it was agents. So initially what we'd say to agents so traditionally what people go to agents and say is, anything that needs a refurb, call me up, right? And that's the wrong thing to do, and I'll tell you why. Because not everything that needs a refurb has the margin for a property developer. Now, what I was going and saying was, we are not your first point of call, but if you need us at the 11th hour, if a chain breaks, if a property is unmortgageable, if for some reason someone pulls out last minute for whatever reason, use us for that. That's where you need us, right? So if you're saving 2 or 3 properties in a chain and your commission is still going to come to you, then use us for that. And that's how we started our reputation, is working with agents and they're using us. But it's the way we framed it to them. So rather than saying to them, anything that needs a refurb, anything that needs a value add, no, it's actually whenever there's a need for us in a desperation to get something sold with speed and certainty, we are your people. So it started off with agents. It then moved to auction houses, funny enough. So auction houses, and again, I was saying to auction houses, the popular lots, the stuff that's selling, just sell it. You don't need us for that. When things are not selling, so when something goes unsold, so imagine someone's gone through an agent, they've not sold it, they've then gone to the auction house, they've still not sold it, they've got no options really, and we would come in at the point when people have not many options and they would use us. And some people frown upon the cash buying world and they're like, but you guys are just preying on desperation. We're not. We're actually offering a service to people, and if you put yourself in the shoes of someone that needs to liquidate a property within 4 weeks, you don't have many options, So that's what we're there for, and that's how it kind of evolved from agents to auction houses, and then I'll tell you about the next part, which is we started the cash buying business as well.
So then with the auctions then, are you mainly buying post-auctions, or you also do buy on the live at auctions as well, or what's your strategy in auctions?
So it's a mix, I'll be honest with you. So what we're not doing is trawling auction catalogues 24/7, because to be honest with you, that's a lot of time, effort, you have to read legal packs, there's all sorts of stuff. But what we are doing is auction houses know who we are, and we know who auction houses are, and it's either one of two things. Post-auction is the most common thing where we buy. So post-auction, auctioneers will call us and say, we need to get rid of this, it's not sold at auction, the vendor needs a deal. And we also do stuff pre-auction sometimes, where if they don't feel like there's enough registered bidders and they don't feel like the property is going to get to where it needs to get to, they'll call us and say, look, would you do a deal on this, basically? We rarely do stuff at auction. We have bought at auction before, I'm not gonna lie, but it's at times when, let's just say, we felt like there was going to be a deal to be done because someone else has not seen something that we've seen in this property. So I'll give you an example. If a property goes to auction and there's no viewings on it, no viewings, no internal photos, nothing, you have no clue what's inside that property. Majority of people will say, I'm not going to buy that because I can't see inside it. We would say that's perfect for us because there's probably an opportunity for us to buy it. Then obviously we take a risk, so we have to calculate that risk, buy it, and then allow viewings, and we can even sell it to another auction house, a couple of weeks after that auction and probably make a profit, or we can hold it as well. But we are buying stuff from auction where other people basically have not got risk appetite for.
And do you have a specific strategy that you buy an auction? Do you just buying the sort of for speed and certainty, but do you have specific areas, a type? Like, is it just to buy, to rent, it's sometimes traded on, I guess?
Yeah, so residential house. So our speciality is residential houses. Commercial, land, yes, I've done that before, but that is not our speciality whatsoever. I'll be completely honest with you. And I can do it, but I know my circle of competence and where our whole team works really, really well is residential. We've got caught out on a few commercial bits previously, and that's fine because it's all a learning curve. But for us, it's residential. Usually we're sort of under 250, 300k on average.
Yeah.
We have done stuff again above that.
Yeah.
We did a 3-bed semi 2 months ago in Croydon, and I'll tell you about that. It was an interesting deal. But that's our speciality, is residential houses up and down the country, less than 300k. We can know that. We've got an underwriting system, and we can basically do it end to end without any issues. Within, I can get you an offer within 2 hours on something if you just send me an address and some photos, basically.
Oh, wow. And on those, the percent, just roughly percentage wise, do you then trade on most of them? Do you keep some of them for your portfolio? How does that work?
It's a good question, actually. And this very much depends on what's happening in the market at any one point. So on average, this is sort of pre-Liz Truss, let's say, and everything that's happened with the mortgage market, we were keeping 2, selling 1. Nowadays, we're probably selling 2, keeping 1 on average. So our focus is more towards trading than it is to holding. And that's probably predominantly because, we're not finding as many high yielding deals in the market right now to combat the interest rates. But, we still do find deals and we still have to hold at the end of the day. So we still are buying to hold.
And you've got 160 properties you already have. So it's not that you don't have properties, you've got a huge portfolio that you got your own. So it's not, it's still, the numbers are still there.
Correct, yeah, that's right. So from our point of view, it's about consistently, whether we're buying and trading or buying and holding, it doesn't really make too much of a difference to us as long as we're buying. But let me give you an example of where we would hold versus where we would buy to sell. So if we're getting a £250,000 3-bed semi in the Midlands, for example, say Coventry, it's rented out at £1,200 a month. The yield's not very good. The debt coverage ratio, 125 to 145%, not really great. What we do is we'll buy that, wait until, if the tenant is going to leave, for example, wait for the tenant to leave. It might be 6 months, 9 months, 12 months, whatever it is, and then we'd sell that, because that's not really investment grade property. That's more towards owner occupiers, right? If we had a 100k property that was rented out at 700 quid a month or something like that, we would definitely keep that because the yield works. It's an investment style property. So our strategy is very much dependent on the type of deals we get in. We'd make that decision. But it's a good question. It's a really good question.
A lot of it is, like you said, yield is a big indicator, right?
Absolutely, yeah.
And what interest you're having to pay, all of that comes into play as well. And you mentioned about the rent coverage. Can you explain a little bit about that? Because I don't know if the listeners might understand that in a bit more detail.
Sure. So essentially, when you take out a buy-to-let mortgage, I'm talking about mortgages here specifically, and it can vary depending on the type of mortgage you're taking out. But let's just take, for example, a 5-year fix. So if you're taking a 5-year fixed mortgage out, your rent should cover 125% of the actual. Your rental income should cover 125% of the mortgage. So for example, if the mortgage is £1,000 a month, your rent should be £1,250 a month minimum. That's the minimum, in order to allow you to take out that amount. Now, if the rent is less than that, then that will limit the amount of loan to value that you can take out. So maybe rather than 75%, you're taking out 65 or 70, whatever it is. Correct.
Got it.
Now,
that makes sense.
One thing that people need to watch out for on that is usually on a 2-year fix, you're at 145% rent coverage. So the reason why people use the 5-year fix is it allows them to get a lower rent coverage, so 125%. And I know a lot of your listeners are more southern centric, so London and surrounding. So this tip could be the difference between allowing you to pull out a certain amount of money or leaving in a certain amount of money is going for a 5-year fix as opposed to a 2-year, for example, because it gives you a lower rent debt coverage ratio.
Coverage. And also, I think the other advantage of 5-year fix is the rates are coming down a little bit as well, right?
Yeah, absolutely. I mean, you've got the certainty for 5 years that that's not going to change. So yeah, there's other advantages, but I'm just talking specifically from a point of view of rent coverage.
Yeah, sure. So then we've covered very much how you started out. We've talked about your cash buying company. We've now started on auctions. I think you've got a third arm to your business as well, right?
Yeah, that's right. So that's Letco. So we've got
Oh,
a
yes.
it's a property management and portfolio building service and business. And the reason why that was born, in all honesty, was born out of necessity because we had landlords where we were managing properties for, and they came to us and said, "Well, can you find me a property? Could you refurb it if they needed a refurb? And then could you manage it again, similar to managing our other ones?" So we then said, "We need to put this into an actual formal service," and that's what we've done. Now, we've got economies of scale. So when we find properties for our own properties through the cash buying, auctions, etc., the beauty of our model is we want to make sure that we are the one-stop shop for everyone that needs to sell quickly, where there's a discount. But on the flip side to that, we can't buy everything. We might buy 3 or 4 properties a month, but maybe we're getting 10, 15. So we need those customers where we can find them the properties discounted because it keeps the whole model running. So it keeps us as the middleman, because you can imagine if they went to the auction houses or whatever and they said, "I need 1 property a year or 2 properties a year," they probably wouldn't really give them any good deals. Whereas if they came to us and they said, "We need this," and we're getting X amount of deals from the auction houses or whoever it is, or even directly, then we can facilitate that. So we are a facilitator between buyers that want to buy stuff that's discounted and good value and the sellers who need to sell things really quickly. The one main thing that we always say to people is we need to make sure that we have control over the process. So if a seller comes to us and says, "I need this done in 4 weeks or 6 weeks," the buyers need to be on board with that. But in return, they're going to get a discount, so it kind of makes sense.
And do you vet these buyers? Obviously, you want to make sure they've got the cash or they've got the mortgage in principle and everything's going to be working like clockwork once the clock starts ticking.
Absolutely. So we would take a retainer fee from them. So previously the way we would work was, we would just basically say, "Yeah, that's fine," instructing things. Whereas that basically allowed people to back out of things or change their mind or whatever it is. And it's not a problem from our point of view for the buyer. It's more for the seller. We end up looking bad because we're in the middle. So we now say to buyers, "We need a commitment fee to know that you are definitely 100% committed." And then on top of the commitment fee, once you've instructed it, you'll then pay basically another fee for the instruction. So effectively, we've got serious buyers and they're getting some good deals. That's what they want ultimately.
So there's a lot that you're doing right now. So how do you manage all this? I know you've got a team, and you guys based in one location. How does your whole sort of model work with your team?
Yeah, so, and talking about kind of the struggles really. So building a team is probably the most difficult thing you can do in business, right? Like, it is the most difficult thing, but also the most important thing. And we had the office, we built up the office, we did all this, that, and the other, and we tried to build a local team. It didn't work, and I'm proud to say that that is probably that's been one of our biggest challenges, and I'm happy to say that it didn't work, but we've pivoted and we've changed it. Everything we do now is remote, and whether it's UK-based team members, whether it's team members that are offshore, everything that we do is remote, and that's been the best thing because specifically for us, when we travel, when other team members travel, they've got flexibility. Effectively, any one of our team members can work from a laptop and a phone anywhere in the world, right? Which means we can travel, we can do whatever we want. So we've got location freedom, which is ideal. We've got departments, right? So whether it's portfolio building, that's a department. Whether it's lettings, that's another department. Property buys today, the cash buying, that's a department. Everything has departments. And within the departments, there's a department head or lead for every single part of the department.
Yeah.
Now that sometimes could be one person for the whole department, or sometimes it could be one person for that department that's managing 3 people. For example, let me break it down for you. We've got lettings, where there's Reese that heads up all of lettings. Lettings then gets broken down into Bia, who manages the maintenance and the maintenance team, and then Kriska, who manages the lettings and the lettings team. Kriska then has 3 people underneath her who are lettings coordinators, and then Bia has 3 maintenance coordinators under her, and there's an escalation process. It's not perfect, and we never, we had to evolve this. It's come through trial and error, but that's kind of the letting side of the business. And we've got this across the board. We've got asset management, refinance. So believe it or not, I don't deal with any refinance anymore. I don't deal with anything end-to-end refinance. Purchasing I instruct it, and then someone from the team will get solicitors instructed, bridging lenders instructed, insurance instructed, get and reinstatement about everything happens within a process. And the difference that we have is we've built a proper system with a process included. So give you an example of this so it's tangible for your listeners. We use a technology-based platform called Asana, which I'm sure everyone's heard of. Within Asana, we've got a template. So every new instruction, every time we instruct a new purchase, how many steps are there in a new purchase? Everything from informing solicitors to chasing solicitors, to informing bridging lenders, to chasing them, to signing paperwork, all the way through to collecting keys, right? As small as little things like collecting keys and then starting to quote the refurbs. That's all within one massive template. So we've mapped that template out. We've got that template. All we have to do is press one button every time we buy a new property, and that whole template is assigned to each team member with a due date. Everything's basically sorted. But that's taken time. That's trial and error. That's taking time. Same thing when we sell a property. Within that template, we've got a refinance template with with little sub tasks as well. So I don't want to go too complex, but
That's a good tip. The Asana we've started using, but we're not using it as detailed as you are. So we might look into templating some of these processes that we're doing all the time. Actually, that's a good tip.
yeah, yeah, and I think really processes are more simple than people think. Don't complicate a process. Just bullet points. A process is bullet points, right? Because if you try and write it all out, you're going to get bored. Put little bullet points. What do you do every time you buy a property, right? And do it every single time. Anything that's repetitive, you can find a team member to take on, and they can do that constantly. The things that are not repetitive, which is negotiating the deal, agreeing deal, that's you, Manny. That's you are that person in your organisation, and I'm that person in my organisation as well. You can't outsource that.
So going back to your role within all these different companies that you have, what is it that you enjoy the most? Where are your challenges? How does it all work?
Challenges are, I'll be honest with you, challenges are always the more customer-facing challenges. So, customers need customer service, and that means they need good communication, no problems, etc. Property can make people quite emotional as well because it's a large investment, it's an income that they're depending on, and for me, the challenges are if something goes wrong, how do we then deal with it? Because things always go wrong in property, and putting in an escalation process, because everyone always calls safe. So everyone used to always think, call safe, that's where the relationship. But the biggest challenge has been how do you then say to them, this is a process, these are the people you need to contact. If it doesn't get to where you want to in terms of satisfaction, this is the person you escalate it to. And I don't mind handling certain things where it gets escalated to me, but trying to go around that and trying to get to me directly has been the hardest thing to try and get customers to kind of differentiate that. But generally speaking, I think it's putting KPIs, putting metrics in place. What does a good day look like for you? What does a good month look like for you? What does a good year look like for you? That could be I've bought 5 properties this year. That could be I've sold 5 properties this. Whatever good looks like to you from a business point of view, put that into some metrics and KPIs and track it. That's what I always say to people.
Yeah, that's an interesting way. Just every month, just have your KPIs sort of out there so the team, everybody's aware of it, and then work towards that.
Yeah, and we have, in terms of our KPIs, it's per department. I'll come back to department. So I have my own, so my KPIs are how many properties have we viewed this week, how many properties have we bought this week, how many offers have we put in. I know all of that data. So when I come to the end of the year, I'm like, this year we actually offered on more properties than last year. However, this year we only agreed less properties than last year. So maybe this year was just a difficult year in terms of agreeing properties. So data is really, really important in general.
And do you have where we are in the market right now? Where are you finding? Obviously, everyone's finding it hard right now. Finance is very expensive right now. Base rates at 4.25. I think we're going to go up to possibly 5 in the next sort of 2 to 3 months. How is that affecting your business models, like across all three businesses?
It's a really good point. I mean, in terms of, let's talk about investment. So investment, it's not obviously affecting anything that we've already refinanced and put on 5-year fixes from before this all kicked off, which is ideal. And to be honest with you, I'd probably say it's affected 20 to 30% of our investment portfolio. But look, at the end of the day, I take a long-term look on things and I'm like, yes, short-term, the cash flow is getting squeezed because obviously the interest rates are higher. However, to be fair, the value of those properties has gone up quite significantly, which has been good in the last 3 years. and at the same time, rents are going up. I'm not going to say is necessarily as much as interest rates, but they have gone up quite a lot, quite significantly. So it's been challenging, but we're trying to balance it out as well. So that's kind of on the investment side of things. So technically speaking, it's affected us, but we're kind of counterbalancing it with the fact that over a longer period, the value's gone up, plus rents are going to go up as well, and they have gone already. On the flip side of things, on the selling side of things, we've not really found things slowing down that much, Manny, to be fair. So there's still plenty of buyers in the market. There's still plenty of liquidity in the market as well. So we've kind of seen that that's not really affected things as much, in all honesty. But is it in the back of investors' minds? Absolutely. Investors are now thinking, I need a better deal. So it's affected the portfolio building side, where we're having to find much, much better deals to give that comfort to the investors that I've got better yield to combat these interest rates. That's the biggest thing for people.
Yeah, so are you fine? Yeah, so in terms of like the leads that are coming on to you in terms of below market value properties, firstly, are there the same number of leads as last sort of year, couple of years? And secondly, are you finding that yeah, so what's happening with that sort of thing? Are there more sellers on the
Sure.
market? You think less sellers?
Yeah, it's a good question. And also, this answer will basically tell you what's going on in the market before it feeds back to even auctions, before it feeds back even to agents, and before it feeds back even to the media as well. So what we're seeing at the minute is a larger amount of leads. So there's much more people in that mid-range 200 to 400k type category, 3-bed semis, where they've put their property on the market, but they're getting offers from they're getting offers from buyers where they've not even put their property on the market yet, or they have and they've not found a buyer. So these
Chain.
chains are not finding buyers, and they eventually come to us. So that's the kind of market that I feel is probably having the biggest struggle right now. On the lower end of the market, so sub 150k, where it's more high yielding, those properties are really difficult to negotiate on, because so most of the vendors want to keep them because they want to combat the high interest rates. But that's where we get most of our sort of requirements are coming in that lower end of the market, the high yielding, lower value properties. That market is on fire right now. It really is, and it's not stopping, because you imagine you've got money in the bank and you've seen everything that's going on worldwide with the banks. I want to get my money out of the bank and into a low value property that's high yielding. I can sell it quickly and easily. It's secure, I can see it, I can feel it, and it yields me a good yield. That's where all of the interest is at the minute. Anything 500k plus is probably struggling a bit more, because affordability is hitting it hard. So we're getting a lot more than what we used to get in terms of, the 600, 700, 800k type properties. We just really can't do anything with that. The stamp duty alone, I say to vendors, is 60, 70 grand on stuff like that. We can't afford to buy it and sell it again, because there's just too much cost involved with that stuff.
So those you're getting the leads through the cash buying company, and if you don't manage to offer on them and it's not your bag, what are you doing with those dead leads?
Good question. So the middle of the market, effectively, we are either going to auction houses or agents and doing a referral, so just referring them on to them. That's one option. The other option is we're basically trying to place them. So if we can get someone, for example, as we said, that we are either sourcing for or building our portfolio for, that's an option where basically if someone wants to buy it. So I'll give you an example of something we did recently. So we had a £220,000 house in Manchester that was rented out at £750. The yield didn't stack, it just, but it was worth 300 probably on the open market. There's one on the street that sold subject to contract at 300. So that's £80,000 discount for someone that can sit in it. Now there's a guy that owns a couple down that street already, and he was actually looking for something to buy, and it just worked for him. He said, look, I'll buy it, I'll wait for the tenant. If the tenant wants to leave, I'll then basically probably either convert it to HMO or I'll just sell it again. There's plenty of money in that. So that's where we're having to be a bit more creative and find local contacts that are interested in certain things, because it's not going to be worthwhile for an investor, but for him, it just made sense. He had a bit of extra cash, he was going to sit on it. He's getting £80,000 discount at the end of the day on the property, so he was happy to sit on the £750 for a couple of months.
I think, yeah, I mean, you've got a really good model. So I think you would be really good for someone who's starting out in property, for example. They don't have a big pot to start with. They have maybe 30, 40, 50 grand. And someone can come to you and you can source them a below market value property, upwards from, say, Midlands or what have you. northeast of the country, and they can just get them on the property ladder. And because they're buying below market value, can you get them funding, or through your contacts get them funding on the purchase price? Because there was this model as well, I think we discussed at a recent event, where so there is an open market value and you have a proven record that as an open value market. You then secure it for 20% whatever at below market, but you can get funding at the higher open market value. I mean,
Correct.
is that something that you can help someone with as well, like a buyer?
Absolutely, and that's what we do. So our whole, and the reason why we call it portfolio building and not sourcing is because portfolio building is about helping you end to end. So that's helping you with a solicitor, helping you with the funding on the front end, helping you with an insurance broker, and then also progressing all the way through to completion. And we get a lot of our clients that come back to us after 6-9 months, and they're like, right, Saif, I want to refinance, I want to do this, I want to do that. Can we have an asset management meeting or whatever it is? And we do that. That's what we do for our clients. We're not here to sell something and forget about them, or them, if they're having problems, not come back to us. No, our point is we will help you buy something, but we are here for that whole journey, and that's why we will manage it on the back end for you. So there's certain properties that I will not sell because I don't believe in. For example, if you want to buy a HMO in an area where it doesn't work, the numbers look amazing on paper, but I know categorically that's going to be a nightmare. I will not source it for a portfolio building client because I will not manage it for them either. And I know that's going to come back to us as an organisation and a business. So we will only build people portfolios in properties where we genuinely believe in and we would back it ourselves. And majority of that is single lets, single family homes. It might be blocks of flats. It might be, we might do some supported living, some social housing where there's guaranteed rent, but we generally try and avoid the general sort of professional HMO market where possible.
So yeah, okay. So sorry. So one more question I had about this model that you. So let's say I am just starting out in property. I want to buy my first property. I've got about, I don't know, minimum. What's the minimum cash that you expect your?
I'd probably say 50k is an absolute minimum.
If I've got 50 grand, then I come to you and say, Saif, look, I'm looking to buy my first property. You find something for me, which is, if you have 50,000, then you're looking at a property maximum price of about what, 180, 200 grand? Because you need to pay stamp duty, legals.
Yeah, I'd probably say, just to be on the safe side, because we always want you to have a little bit of a contingency, probably about 120. I'd say 120, 125. It might be worth 145, 150. You buy it. Obviously, you're going to have a bridging loan, just bear that in mind as well. So you have stamp duty, legal costs, and a bit of a bridge. So you need that buffer. And then say in 6 to 9 months' time, you refinance it and pull some of your funds back out. You're never going to pull all your funds back out unless you get really lucky, but you pull some of your funds back out. So then you can maybe recycle that onto the next deal. So you might be working within that 6 to 9 months period. You've saved up some extra money. You top up your original balance that you get back from the bank, and then you kind of go again. So that's kind of how the model works, generally speaking.
Okay, quite interesting, really. I think it's a really good startup strategy for someone who wants to learn how to do it. Maybe buy 2 or 3 properties through you, and then go and do something else with it. If they feel they've got the experience, then they feel more confident, and they might want to try a different area more local to them, which might not be up north. I think it's a great strategy. I definitely say, if you guys, whoever's listening out there, all our listeners, please do engage with Saif. And how should they contact you for that? What's the best way?
Yeah, so I'll give you my links basically to social media so you can drop it down. But we do have a lead registration form, so they can just go straight onto the lead registration form and sign up through there. But also drop my personal social medias on LinkedIn, Instagram. If they want to message me, please, I would say to people, don't worry, just message me. Don't be scared to message me or whatever. I'm always happy to, when I can, I'll get back to everyone basically. And I like to speak to people as well. Whether they're new, whether they're kind of experienced, it doesn't really matter. But for me, this is probably one of the best wealth building strategies over the long term. It's not necessarily going to, give you necessarily an income, let's say, generation short term straight away, but for the long term, this is where you build and start you building your wealth and your
pension. It's a pension strategy. It's an asset building. It's slow but sure, but it gets you there eventually, I think.
Absolutely, yeah. But it's really good for time poor people, I would say.
100%. If you've got a full-time job or a business that you're running, and you'd rather be, as you said, move your money into investing rather than having to pay tax on it.
Correct.
Through your pension and all that, but that's a different talk. But let's talk about your pension strategy. I know you won the Property Trader of the Year award very recently.
Thank you.
So tell us about that, Lucy. What was the deal? What made you think what won it for you?
Yeah, so and this was pure coincidence. I'm not going to lie. This is pure coincidence, and purely from our perspective, we wouldn't normally be looking at this kind of deal, but it just came to us. It was the right timing. The skill set for us was not about the deal. The skill set for us was about how we exited that deal. So buying it was obviously a good skill set, but it found us basically through our website effectively. So the deal was a land deal, and by the time we released this, I probably would have already done the Titans talk for you guys anyway at the Titans event. But the deal was a land deal, so it was a piece of land, 3.5 acres. It had outline planning for 26 houses on it at the time, and we had a Mr. and Mrs. Smith that came to us and effectively said, look, the land's been on the market for 2 years at £1.2 million. I looked at it and thought, an agent overvalued it as agents normally do, and agents just kept it on there for as long as they have. Now, the reason why they came to us at that point was they were in the process of getting divorced, and they needed to get it sold at that point. They had no other option but to get it sold. So they had all the luxury of selling it for the last 2 years. They were I'd say too greedy at leaving it at 1.2. If they had listed it at anywhere around 800, 900 grand, they probably would have sold it, but they listed it at 1.2. Anyway, bearing in mind this is Q4 2020, so still mid-coronavirus basically, and everyone still didn't know what was going on in the world. So it was a bit of a risk from our side, but we took it. We had got a RICS valuation on the land at £975,000. We had agreed to buy it from them at £475,000 at the time. Now, we agreed that before we got the RICS valuation, in all honesty. So the RICS valuation probably surprised us a bit. We probably thought it might be 900, 950, but 975 was a pretty good valuation. And some people are probably thinking, well, why are they taking such a big hit? They had inherited that piece of land and they had got it at 60 grand. Initially, whoever was bought it at £60,000 and then effectively came to them. So they're making a huge uplift to 475. We're then basically, obviously, buying it in and then we're selling it to someone else. Again, under the RICS value. So effectively, there's 3 people that are benefiting there. The original seller's benefiting, we're benefiting, and the person buying it from us is also benefiting. So with the RICS value at 975, we ended up selling it in auction at 750,000, and that was a 6 months turnaround, end to end. We didn't go for planning, we didn't do anything, we just kept it as it is. And the people that bought it have a GDV on it of around about 9 to 10 million pound. They're building, I believe, 33 houses, somewhere around that. And there's a massive margin in it. Now, and again, people would have come to me and said, well, why don't you build it? There's 2-3 million pounds worth of profit. Because I don't want to sit 3 to 4 years on a building site and have all my money tied up and all my eggs in one basket. And it was at a time where, during COVID, we couldn't see that far ahead what was going on. So for me, I'm in, I'm out, we've traded it. And I thought it was a worthwhile trade to put through for Property Trade of the Year, because I doubt we're going to do another deal exactly like that right now. So yeah, it was just right timing and just the right deal to have done.
Incredible. £250,000 profit in 6 months for maybe just starting it up and putting it in an auction, right? You put it in an auction?
Yeah, absolutely. So we put it into auction, and I will come on to this as well in a second, but from our side of things, we didn't just, this is where I'm saying the skill set came in. Anyone could have just put that into auction and it wouldn't have sold that easily. What we did is we went to house builders that we know locally, so small to medium sized house builders, and we put it to them, and we got offers at £1 million, we got offers at 900,000, all sorts. But it was a private treaty offer or a subject to offer, and we said, no, we don't want this. So we went to auction, we put it to auction, we said to the auction house, we will market it, just you guys put it in through your platform, but we'll go. So we found the buyer, but we forced them to go through auction, so it got them to commit to that 10% and that 28-day completion effectively, which meant we got less, but we're okay with that because we moved on.
Exactly. That is an incredible deal. I want to hear all about it at the next Titans event. But really, so I just wanted to touch a little bit about where we are in the market right now. I know we've talked a little bit about that, but what would be your advice to people who are sort of considering, getting into either property or maybe looking to scale up to their second, third property? There's a lot of noise in the market about interest rate rises. There's banks falling through every single day in America right now. There's a lot of risk at the moment, a perceived risk, as it were. What sort of advice would you give to someone, imagine yourself like 6-7 years ago, what would you tell someone who's looking to, excited about property, but not thinking whether this is the right time? What sort of advice would you give them?
Yeah, so this advice is evergreen. This will work in any market, no matter what happens, because this is what it's all about, right? Hopefully, this podcast is going to be evergreen for everyone as well. So, the best advice, and genuinely, if I can rewind, and this is what kind of I would go back and do as well, is if you're not trading, so this is a caveat, if you're not trading, if you're property investing only, do not time the market. Don't. I've never ever seen someone time a property market, or any market for that matter, and get it absolutely spot on all right. The best thing that you can do, and the best piece of advice you will get, is something called pound cost averaging. People do it in stocks and shares. People do it in property without realising. And pound cost averaging means buy property consistently, one a year, one every 2 years, whatever it is, but be consistent whether the market's up, whether the market's down, and average it out, because you don't need to time the market, right? Because you're not trading. So for me, if you've not got into the market yet, or if you're already in the market, get into the market or just continue what you're doing. If you're trading, that's a totally different ballgame. Then you would need to start to understand the market and timing the market and stuff. But we're not going to go into that today because our kind of topic is mainly around investing in the market. But for me, I go back to that point that I made at the initial start of the podcast. Since 2015, when I bought my first property, people had been talking about recession, and I talked myself out of buying property before that, and then I took the leap of faith. And every year since 2015, people have still been talking about recessions, and look where we are today. So just get started and average it out.
I so agree with you, Saif. A lot of my friends who are non-property people say to me, "Well, man, is it the right time?" And I'm like, "It's always the right time. Is when you're ready, when you're mentally ready, you have the headspace to go and do the deal, start looking for the properties that whatever your strategy is, buy to let, HMOs, whatever that is. Now is the right time. And I couldn't agree
Absolutely.
more with you on that. So going back to you, so that's great advice, actually. Thank you for that. I think whoever's listening out there, I couldn't sort of back up Saif more on this particular advice that he's given you, and definitely go into what you have to do, and things will fall into place. And if it doesn't, you learn from it, and you won't do it next
Absolutely.
time. You got to be
Absolutely.
hands-on, right? Hands-on is very, very important in property. So again, then looking at where we are, you've got all these different businesses. Where are you going to focus on in the next 3 to 6 months, given where we are in the market with all the inflation, interest rates, and whatever? Where are you focusing your energies on right now?
Yeah, I like the fact that you said 3 to 6 months, because a lot of people are like, what's your 5 year goal? What's your 10 year goal? And actually, I don't do 5 or 10 year goals. It's too far ahead. And, especially with the Black Swan event we've had, 3 to 6 months is a real good sort of, vision and goal setting time frame. So for me, my focus really is just building up the team even further. As kind of mundane as it sounds, the reality is the team is what creates everything and supports everything. So we've introduced even financial incentives for the team, which is linked to the company's profits. For example, that was a massive step for us. So now all of our team members are even more keen to get stuff done. For example, I've got team members even keener than I am to trade properties, because trading properties obviously allows a crystallised profit for them, and that then puts money on the balance sheet, so their incentives and their bonus is higher. So for me, I want to make sure that the team is more incentivised, we grow the team, but also trading is probably a big part of what we're going to be doing over the next 6 months. It is, like you said, it's not always an easy market, but for me, trading is going to be something that we're going to be focused on, and at the same time, growing the lead generation side of things. So we want to get more leads in, and we want to work more leads, and that's going to ultimately lead to more investment properties plus more trading properties as well. But for me, it's really just focusing on what we're doing, because what we're doing is working, and I don't want to get shiny penny syndrome with so many things going on. I just really want to do more of the same. That's the focus for me.
So keep going, basically. But do you, like, when you started out, did you have this? I know you talked that you can't think like 3, 4 years, 5 years, but did you have a vision at all, or you just said, let's just keep grinding, like
Honestly,
walking?
yeah, we just start, we tried so many different things. I tried rent to rent, I tried service accommodation, I tried HMOs, I tried so many different things, and so many things didn't work. And it's not that it didn't work because it doesn't work. It didn't work for me at that time, and in terms of the enjoyment and all the rest of it. So for me, now I've found a happy place. It's taken me years to get to this place. It's not been easy, but I've found a happy place where we've got really good balance between the investment and the trading side of things, and obviously we've got, as I said to you, the cash buying side of things plus the portfolio building side, and we've got a really good balance. All we're going to do is now sit and focus on that. And as I said, for your listeners, one thing I would say is, if you've got a really good job that you enjoy and it pays you well, there's no need for you to quit that job. you can do what we've said in terms of building up a pension and building up your wealth through just investing in property. Don't go out and do all the stuff that needs a lot of your time and effort. Just do the stuff that's hands off as much as possible. And if you've got listeners that are like, I don't enjoy my job and I bloody hate it, then they should not go out and try and do the pension and the wealth building side of things. They should go out and find a way to build a trading business that replaces their income. Once they've built their trading business, that could be rent to rent, that could be HMO, that could be whatever, service accommodation. Then, once you've got a trading income coming, not an investment income, a trading income, then use that money towards building up your assets and building up an investment business. And when you have both, either through a job or a trading business, and you have the investments and the asset building, both of them combined is what builds you your financial security, financial independence, and financial security.
I think it's really good advice actually. And I think where we find it hard in our business is because we've always mostly done investments. We find sometimes we've over leveraged a little bit, and now we're trying to obviously leverage down a little bit. But I think I personally would like to learn a lot more from your trading business, and that's why I'm more excited about the Titans event coming up. We will be releasing this podcast before then. So do you want to share a little bit about what you're going to be talking about on the Titans event on the 11th of May? Because I know you've got different strategies you're going to be talking about, some of your best case studies, some of your secrets, hopefully as well. So tell us maybe one or two strategies and auctions that someone who's listening to this podcast might be able to take and go and start working on it.
And then also, what is an auction underwrite and how do auction underwriting work? The reality is, if you can't make a deal work where you're buying it, paying all the stamp duty, as we said, all the legals, and then selling it again, and you've got a smaller margin, there's still ways to make that work without actually having to physically own the property, and you can still make money from it. And I've done it, and I've got case studies on how I've done it. I've done it for the last 3-4 years consistently during COVID and outside of COVID, and that's what we're going to be talking about. So genuinely, this is not one to be missed if anyone's listening to this, and I look forward to seeing all the Titans members as well. Yeah, sure.
Brilliant.
So just to keep it really,
and you talked
simple,
a bit about auction arbitrage. Can you explain a little bit about what that is?
One auction house, right? And you may be doing something to that property. As I said to you, for example, it might be that there's no viewings on that property, it's a repossession, and I would buy it from that auction, sell it into another auction literally a month later without doing anything to it, but just allowing viewings, and suddenly you've got a 10-15% uplift because you bought it from one auction, you sold it to another, and that's something again that we can go on to as well. Doesn't necessarily have to be tarted up.
And tarted up maybe some photos,
videos,
so people can actually see what they're buying.
That's literally, and I'll go through one case study where I think we had an £18,000 uplift. Good. Wow.
Yeah, I think you're getting me quite excited about auction trading and property trading because I haven't done it. I've still never bought a property in an auction. Can you believe it? 13 years from like when I'm doing property. But yeah, I think there's always something new to look forward to, right? So this is maybe my new thing, which I can do. So really, I think that just leaves me to say, have you got any predictions for the property market, crash, correction? What are your thoughts? Everyone's very nervous right now. They think there's some big crash happening. What are your predictions if I may put you in the spot?
Not the news and the media and all the rest of it, happening and continuing to happen at the minute, whether it's Bank of England or the US Fed. He's probably got a little while longer to go, so maybe it's another 0.25 as we saw the US Fed increase it, etc. But at some point, and that could be the next one, the one after the next or the one after that, at some point they're going to stop increasing interest rates. And the reality is, every time they're putting the lever up and up, more banks and the economy is getting worse and worse and worse. So there's going to be a point where they say, we don't want to tip the economy too far, right? But at the same time, they want to control inflation. So for me, I'm waiting for the point where they pause any more rate hikes. That's going to be a massive, significant point in the market. And if they do that soon enough, and soon enough could mean not necessarily the next monetary committee for the Bank of England, the one after that, if they do that as soon as that one, the market might just take a breather, and maybe the market starts to then anticipate when does the interest rate start to go back down the other way. And how quickly that happens, no one knows. So do they pause for 5 meetings, 6 meetings, 7 meetings before they start to reduce, and do they start reducing really, really slowly? But my point is, we have reached there or thereabouts the peak in terms of interest rates, in my opinion. So I think we are feeling absolute maximum pain right now. And what I'm trying to say to people is, if you can survive this couple of months, you will thrive for the next couple of years. You really will. So that's my kind of opinion, generally speaking. Absolutely, yeah, and I mean, it's like petrol companies as well.
That's good advice. And in terms of energy costs, I don't think you're affected as much because you do single lets and tenants pay for their bills, right? So you're not really affected by the energy costs. But is there any insights that you may have that you may want to share with us? Do you think these energy costs are going to keep going up, or there might be a point where the government will force them to? I mean, I don't know if you've heard in the news recently, but I think their profit margins have trebled, quadrupled.
If this continues, this is going to be Armageddon. But the reality is, we're really close to the top on everything, where things need to start to come down, just to relieve that pressure off the whole system. And I always put it this way: the governments don't want the system to break. They don't want to break the system at the end of the day. They want to make sure that we've got a thriving economy, the economy is growing, and everything else is working quite well. But at the same time, they're trying to combat inflation. So I don't think they'll allow us, and they couldn't sort of, I guess, protect that situation quickly enough. But right now they've got enough foresight to be able to kind of say, right, we need to start tweaking things so it doesn't break the system. And this is just my opinion. This is not based on any facts or anything. I believe we're using a specific program where basically, say for example, a tenant would message in and say, I've got a boiler fault, I've got this, I've got that. It will then come back to them with an automated response. So for example, in the winter, between a certain period to a certain period, oh, my boiler's not working. Well, have you tried to pour hot water on the outside pipe, for example? So these little things before it then gets escalated to, okay, we need to now call an engineer out, whatever. So we're using it on the letting side of things mostly at the minute. Not really. And I say this all the time. I think regularly the retiring landlords that I just had enough.
Yeah, sure.
The market.
A couple of things I may not have asked you, but I just thought I'll ask you anyway. What are your thoughts on ChatGPT? Are you using it as some sort of a source for content writing, or just for making your buying decisions and what have you? Are you using it at all in your business right now?
Correct.
Software.
Yeah. It's true.
Ah, interesting.
I work
And
with my
any,
wife and I
in
work
terms
with
of
my brother as
EPC and all
well.
that, any of this regulations is
I've had a
affecting
frank
you
chat
or your
with both
business
of
at
them, and I
all?
said to them, look, when
Do you
we're at
happen
work,
to?
it's a work conversation. Don't take it to heart. Even my brother, that's whether it's me and my wife or vice versa as well. We've got to say to ourselves, look, after 6 o'clock or whatever it is, 5:30, whatever, prioritise that. I'll put everything on hold. I might do phone calls once or whatever it is, but just a change of environment, because being at home, if you are at home and working together at home, or just being together in general, is not easy. So you need to get out of that environment. We travel a lot. Say for example, we're not having the best day one day, we'll go to a coffee shop, for example. Just a change of scenery, change of environment, or might go on holiday. We're quite spontaneous, so I might just go on a 2-day break or 3-day break to Europe. Just the main thing is mental health is so important, and if and when things do start to get quite difficult, just change your environment, change your scenery. That's all.
But hey, listen, it was so nice to talk to you. Hope you enjoyed it. I know it can be stressful being on the podcast and all these questions and what have you. So guys, hope you had a great time listening to Saif. Please do connect with him. We'll put all the links there. Just send me the links that you want me to put down. And it was so good, so great. I've learned quite a lot today, and I'm quite excited actually about hopefully trading at least a couple of properties in 2023. So looking forward to that talk, but also maybe learning, from you maybe directly, or if you have mentorship going, then let me know. But yeah, other than that, great talking to you, Saif, and you've done so incredibly well. So really proud, and I'm sure you are as well. So lovely speaking to you. Brilliant. Let me just stop that now.